The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We pick things up slightly in positive territory. You were lower overnight. We trade higher. We back off a bit. Markets, S&P's up by 10 points, or about 0.1%. NASDAQ 100, we're up by 0.2%. 24,654. The Dow right now up by 21 points. Basically just above flat. 46,203 in the Russell, positive by 5. Bitcoin continuing the pressure from the highs of yesterday. As in the highs, you were pushing 94,000. You almost hit 90,000 again overnight. We hit a low. What was it exactly? 90,055. We're trading off 1.75% on Bitcoin. Crypto continues to be under pressure. Ethereum off by 2.4%, 3,054. Crude under pressure this morning. How about that acceleration? From $60.50 at about just prior to 5 a.m. You drive down almost $1.75. That moved. And that's a move, folks, over just a few hours. $1.75. We push a low of 58.75. We're trading at 59.06, on crude. And you jump over to yields, chopping around a bit right now. You got the 10-year. Right now up one tick at 112.26. And you jump over the dollar, DXY. 99.81. You got dollar strength coming at you. Gold holding up well with some dollar strength, up by $48 at 4,114, up 1.2%. You jump over to silver, up 2.2%. We just hit $52. We're trading at 51.60. All right, now we kick things off. And yeah, NVIDIA earnings tonight after the bell. We'll see where we go from there, but that's going to be all the expectations. NVIDIA remains the performance king. You better believe it, man. The contribution of stocks in the S&P 500 to index gain amazing. You look at all the equities from the top 51 to the top 300. 236 points is what they gained for the S&P 500. NVIDIA alone, 209 points. It's amazing. One company versus 250 companies. It's an important moment. They come out with their numbers after the bell. We jump over to NVIDIA right now. Catching a bid. Why not? Up by $3 in the pre-market. You're pushing 184. We check out NVIDIA. Sell-off yesterday. We had some volume, folks. Okay, 213 million shares. Trading into 207. That was the previous low, but you are coming into this bid that we got with 264 million. So you can't break below the lows of the daily on November 7th, where you had a buying volume, 264 million. So you're coming into some nice support. You're there on October 3rd as well. You take a look at the Analyze tab when you talk about the move that's expected for NVIDIA, and about a $12 move after the bell for NVIDIA. All right, we jump over to this one, just hitting the tape. 4 minutes ago, right when I was getting ready for the program, Blue Owl calls off the merger of its two private credit funds after announcement rattles the stock. Now, we talked about this yesterday. And yeah, the merger would have meant a 20% loss, okay? They were going to merge two of their private credit funds. Folks, this company is very involved in AI, okay? And when you have all of this financial engineering going on, okay, you're catching a little bit of a pop today, but be careful of that pop, folks, okay? Be careful of that pop, because if they were going to get it done originally, it means they probably need to get it done. This thing just traded from 20 down to 13. Okay, now they call off that merger. Yeah. restricted redemptions we talked about yesterday. When the deal got done, okay, the firm restricted investors from redeeming until the deal closed, even though the merger would have meant a 20% loss. That's not how things are supposed to happen when you're making solid investments for future growth. Okay, you're stuck in a fund, a private credit fund, and they're going to merge with another one of their private credit funds, and that means you get a 20% paper loss, and they're restricting anybody taking their money out because so many people want their money out until that gets done. Now they're saying, don't worry, we're not going to do that. Listen, I don't know the fundamental risk was in those companies, but you better believe that what's going on here, they have some risks. They were trying to get that merger done. So many people want their money back, they can't give their money back anymore. Okay, and now they're calling off the deal because the paper losses were creating such a problem as well. And yeah, private credit. Okay, now rebounded, it should say ever so slightly. Things up like 10, 20 pennies. You just traded down $7 over a period of a couple of weeks, months. When you go back to that 20 point. Yeah, months, couple of months. Now that the fund merger is terminated, they're going to allow investors to redeem in the first quarter. Yeah, they were going to push people back for the entirety until that merger closed. Now they can have redemptions in the first quarter. But here's the problem I see in that. If you're in that fund, are you asking for a redemption? I'm considering asking for a redemption, all right? Once the cat's out of the bag, they have a problem in terms of liquidity, putting it lightly, right? We jump around to some of the other Magnificent Seven. Amazon shares slightly in the green today. We're up at 223. Jump over to Microsoft. They were down yesterday with some downgrades of Amazon and Microsoft. Microsoft in the red again, down by $2 right now at $4.91. Meta wins their antitrust suit yesterday. You're down a little bit, down to $5.95. All right, we jump to retail earnings this morning. Target. Decent numbers, and then they give it up. And you jump over to Target. They lower the top end of their profit outlook on soft demand, as they put it. They expect earnings per share, $7 to $8 this year. They cut the high end of that. Third quarter results surpassed the average annual estimates, but the key retail metric of comp sales contracted more than expected. We are relentless in our pursuit of returning to growth and not satisfied with our current results. Well, that's encouraging, Mr. Michael, COO. Target plans to increase capital spending to $5 billion next year to remodel stores, open new locations, and fund improvements. This includes making sure service is friendly. I wonder how much of that $5 billion CapEx goes into making sure service is friendly. I don't think Target has a problem with that, but tough to quantify. It's a lot of money for a company like Target, $5 billion. Their stores, they probably do need a little bit of a revamp. You know, they are not competing with Walmart on price. That's for sure, right? So they have to remain competitive in the shopping experience. They recently cut prices on thousands of essentials. Yeah. $1 ornaments, $10 throws, and shoppers continue to make trade-offs. Target's partnering with OpenAI to allow shoppers to use ChatGPT on its platform, following rival Walmart. Lowe's, on the other hand, we'll get into them after the break. Lowe's trading higher on their numbers. There you go. Lowe's up by $10. We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got markets chopping around this morning. S&P's up by 4, NASDAQ in the green. You get the Dow barely in the red this morning, and yeah, I should jump around. So we got Target shares. You're trading lower to 85.66 right now. We take a look at Target on a volume basis. How about that, right? I mean, it's pretty wild to say that this thing could be heading back to like $60. I don't know. Doesn't quite make sense. But it seems like that's where the charts are lining up for. When you look at the volume in September, lower price, 190 million. Okay, you get a boost in October on only 168 million. And now we're trading lower, and you're going to get some volume today. That's for sure. We've done 80 million so far. I don't think we're going to do 190 million, as we're already only, what do we got? 8 trading days left in the month is all we got. You jump over to the weekly. Boy, you know, we get some dicey action here. You break below these lows and you do it with some volume. Oof. And, you know, from a technical perspective, that's what you're looking at. And from a fundamental perspective, you know, they have a problem. And they're going to solve that problem. Their plan is, trying to find, by spending $5 billion next year. It's a 25% increase for a retail store that's struggling to grow. That's a risky model. Okay, they're going to remodel stores, open new locations, and fund improvements to merchandise and the shopping experience. They probably need to spruce up their stores. It's been a while. As somebody that enjoys the shopping experience in Target, It's an anecdotal take, but yeah, it's the same old deal. You can't do that for decades at a time. And they really haven't substantially improved. They really did it during COVID, of course. Everybody did, right? Curbside, takeaway, all that stuff. Their parking lots now full of dedicated spaces, always seeing everyone coming in and out. But nonetheless, then you jump to Lowe's, and a little bit of a different story. As Lowe's beats in a couple important categories. You're trading up to 229 right now. Now, this thing just bounced off of basically the consolidation area for most of this year. You're jumping from 219 at your weekly. And you check out some of the Lowe's numbers. They beat on earnings per share, $3.06 versus $3 was what the market was looking for. Same store sales growth for the second consecutive quarter. Digital channel and in-home services. Imagine that's not actually people buying stuff in the store. Okay, it's people either buying stuff digitally or having Lowe's come into their home for services. Continued growth in sales to professional contractors, a market it has sought to expand recently. Yeah, they recently bought drywall company Foundation Building Materials in August. That was an $8.8 billion deal. They're trying to build out their professional businesses services. So what's going to happen, right? You're going to have those contractors, of course, spending there. The professional market, Walmart, is the clear leader on the professional side, and they're trying to eat into that. They adjust their full year profit target. Earnings, $12.25 a share. Previously, $12.20 to $12.45. Okay, so slightly on the lower end. A long and waited inflection in home improvement spending, though, is how they put it. Home Depot said the do-it-yourself shopper came in lower than expected due to weakness. Higher interest rates have been a slowdown in those big projects. But guess what? Professional, they're getting it done. Continued growth in sales to professional contractors. So the conference call beginning at 9 o'clock. You're trading up $10. We take a look at the daily on Lowe's. Yeah, that was a lot of volume yesterday because Home Depot already had their numbers, and they were some tough numbers. Excuse me. All right. We go to earnings, to a little bit of a big picture. You better believe it. Companies are warming up to saying AI is the reason for job cuts. Do you remember in COVID, no matter what was happening, executives could get away with almost anything, right? They pulled all their guidance. I remember having the conversation on air with my dad saying, why would you not pull your guidance right now? There were no punishment whatsoever to pull your guidance during COVID because that was the nature of what was going on. And why would you not blame AI no matter what is going on, right? The last thing you want to say is business is slowing down, okay? And it's real, of course. But yeah, it's going to be the use no matter what is happening. Whether you talk about Lufthansa, whether you talk about many companies, okay? For much of the AI boom, companies shied away from attributing job cuts to AI. About the negative headlines, the computers taking your jobs. But guess what? AI has been cited for 48,000 job cuts in the U.S. so far this year. Of those, 31,000 AI-related job cuts were announced in October alone. We're on the cusp of like some big things happening, man. It's November, folks, and last month, 31,000 AI-related job cuts. Now, guess what? The economy's been weakening, okay? Any company, like I said, is going to blame those on AI versus just saying that we're cutting because we're slowing down and we're a bad company. We're worse than we were. We need less employees. That's never what an executive's going to tell you. They're all going to say it's AI. But if you put yourself in that situation, the productivity of employees going forward, there's going to be a lot of companies that are at least pausing hiring and reflecting on the nature of each employee and the productivity, because you're going to be able to do a lot more with less employees. And yeah, that's not going to stop. But 31,000 last month alone. You got Amazon out there saying it's not AI driven, not right now. But yeah, they're coming. You better believe it. All right. In terms of capital for AI, as Blue Owl deals with their problems, Brookfield targets a $10 billion for AI fund in NVIDIA Pact. They're partnering with NVIDIA and Kuwait. And what are they going to invest in? AI. What's that AI going to invest in? NVIDIA. Circulatory. There you go. Right? It's going to anchor the program with the Brookfield AI Infrastructure Fund, which launches Wednesday. And Brookfield Asset Management has already received $5 billion in capital commitments from industry and institutional partners, including Brookfield, NVIDIA, and Kuwait. They're going to acquire as much as $100 billion of AI assets using co-investments and leverage with purchases across energy, land, data centers, and other parts of the infrastructure chain. They manage $1 trillion. And yeah, NVIDIA going to be investing in an AI fund that's going to be investing in NVIDIA. NVIDIA earnings after the bell today, folks. Stay tuned. We're coming back looking at some equities. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps. We opened we'll call it flat as we tick lower into the red. Right on the opening bell, S&P's right now off by 2 points. NASDAQ 100 positive by 2 points. Dow off by about 25, and the Russell positive by 2. All the indices within 1/10 of flat right now, so we got a choppy market. NVIDIA earnings after the bell, as I mentioned, and we check in on other retail, though. How about TJX and Marshalls? Yeah, on their numbers, trading higher. We'll jump over the headline in a moment, but this thing's been a rocket ship. The only thing I'll say is we're bumping up against the top portion of that channel line right now. So be careful entering this trade right now. Great equity, but we are bumping right now against that top portion of that channel line. You're up by $3 for TJX. And there it is. They hiked the outlook. CEO says the holiday season is off to a strong start. And this is where, you really want to look at where you fall in the pecking order, okay? Because, Target's going to spend $5 billion, man. They got some issues, right? And they have to spend that money. Longer term, that may be a good thing. Look at that. Look at TJX. Give it up. This is where, channels are the best. Channels with some volume, Fibonacci numbers, okay? But think of our man, Bud Rolfs, Channel King, former host at TFNN, newsletter writer, amazing man. Think you often, Bud. Miss you, buddy. And look how perfectly you're bumping up against that. I saw this thing popping in the pre-market. Nonetheless, strong equities, man. You got TJX. And how about sales rising 7% during the quarter? You got TJX, Marshalls, Home Goods. Top and bottom line, raised the guidance, $1.28 versus $1.22. Revenue of more than $15 billion. They were supposed to take in $14.85. Net income for the 3-month period, $1.44 billion. Comp sales rose 5%, ahead of the 3.7% number they're looking for. For fiscal year 2026, they're looking for comp sales of 4%, better than the 3.4% growth. My expectation will be that the market, they're going to underpromise and overdeliver, right? The third quarter, they had comp sales raising at 5%. The expectation is that they're going to grow at 3.4% for the fiscal year. They're going to give you a number that they hope to beat. Their number of comp sales is 4%. Now they're going to attempt to beat it. And they probably think they can if that's what they're putting out. Expecting earnings per share, 463 to 466, just above the 461. Strong numbers for TJX as they continue to march higher. Jump over to Lowe's on their numbers, up by about 4% right now. Home Depot up by 0.5%. You jump over to Target, down by 0.7%. Look at Target getting it back. We got buyers on the opening bell there for Target shares, only down by 0.5%. Spending $5 billion this year. And as somebody that's in that Target store often, they should. They got to spruce it up. Sometimes the aisles are empty. I'm saying you're paying all this money for real estate, and you got empty aisles. Well, guess what? They have to get rid of inventory sometimes, and they're not just going to stock it. They're going to get rid of that inventory. Otherwise, they got to write it off, and that hits their earnings. All right, you talk about winners. How about Lazy Boy? Yeah. Strong fiscal second quarter earnings, 71 cents a share. The market was looking for 54 cents. Yeah. Revenue, $522 million versus $517, but they really brought it down on earnings, and they're buying it on the open. Look at this thing. Lazy Boy. Checking out the fundamentals of this company, a $1.4 billion company. $1.4 billion company. Markets, imports, exports, distributes, and retails upholstery furniture products in the U.S., Canada, and internationally. Well, that's quite a weekly bar. Look at this thing. How's that for a bear market low of 53 pennies? Whew. Look at that, right? The COVID lows, the 2022 pullback. We pull back and we catch a bounce. And you know what? You're probably going to do with some volume off those numbers, man. All right, we talk a little bit of uranium and nuclear energy. And yeah, nuclear's the deal for the time being, folks. And whether it's fission, fusion, solar, okay? I've heard Sam Altman talk about whether it's solar, whether it's fusion, whether it's right now, it's nuclear. Trump administration backs 3 Mile Island with a $1 billion loan to Constellation. And yeah, this is the power plant that Microsoft and Constellation have a plan to restart, has renamed the plant the Crane Clean Energy Center. If you don't think marketing matters, folks, when it comes to nuclear energy, I challenge you to look at that name. The Crane Clean Energy Center. It's one of 3 shuttered reactors. Can't call it the 3 Mile Island Clean Energy Center, can you? You know, I have to kid. That's going to be the battle with the expansion of nuclear energy. Not in my backyard as it goes, but boy, we need it for the size of the data centers going on, and this is the deal they inked with Microsoft. That ceased operations in 2019. Oh, how the world has changed since then. Can you imagine allowing a nuclear reactor to cease operations? Any number of tech companies would come in and scoop up that nuclear reactor and never let it go dormant, right? One of a dozen reactors that closed in recent years, but that's not happening anymore, man. It sits on the same site as 3 Mile Island Unit 2 that melted down partially in 1979, worst nuclear accident in U.S. history. But yeah, they're going to build that out. And Microsoft is going to have exclusive, I'm trying to say if they see it, yeah, because Microsoft's going to have exclusive, Microsoft's going to invest in it, and they're going to have exclusive rights to that energy for a certain amount of years. There's Constellation. You're up by 3.6% right now today. We pulled back a bit from 412. The other one, if you're looking for uranium, is Cameco, which is pulled back as well. You fill that gap from that acceleration in October. You jump over to gold, catching a bid. See if we can get above these sell-offs with some volume. Yesterday, you bounced at the same amount of volume that we bounced on Monday, and we're getting a bounce today up by 1.1%. And strong numbers when you look at the strength the dollar has. Dollars is pushing 100 yet again, 99.84 right now. Pushing 100. All right, the other thing we get today is the Fed minutes. You got enough going on? We sure do. Where's that one? I had it pulled up. We'll talk about it when we get back. We get the Fed minutes today. We got NVIDIA after the bell today as well. And we got markets kicking things off in positive territory. S&P's up by 0.2%. NVIDIA up by 1.8% right now. Stay tuned, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's up by 22 points. NASDAQ 100 up by 120. You take a look at this thing on a weekly. Important to remind you, the A to B, C to D, you break that B point. June 23rd, you do it with price action, you do it with volume. We finish the 1-to-1, and we're just pulling back a little bit. And where's the 3A2 pullback? Right at the highs of earlier this year. Okay, right in the middle of all that action. And that, folks, is 550 points below where we are right now. Now, you look at the volume and the selling. Okay, the last 3 weeks, we have ramped up. 7.2, 8.1, and 8.2. And we're coming into Wednesday, and we've already done 4.6. And guess what? We're going to get Fed minutes today, okay? And we're going to get NVIDIA earnings after the bell. And you better believe there's a potential for extreme volatility, extreme volume, and we got volume to the downside over the last few weeks in this market. Folks, the run we've had since April, this market's never seen before, okay? And I say that as we are in a 17-year bull market right now, but the wealth created in a 6-month period, yeah, you can say it's only rivaled by the acceleration maybe you had from the COVID lows, okay? There's the 87 crash, the rebound some of those times. It's always after the crash that you get those types of accelerations. But you're talking about an S&P that's up more than 40% from the lows to the highs over that period of time. You're talking about a NASDAQ 100 that trades from 16,000 to 26,000. Okay, 10,000 points. Yeah, you're talking about a run of like 60%. Market's due for a little bit of a natural retracement. You got some of the biggest leaders out there in the financial industry selling off their NVIDIA stakes. So the probability of risk reward lining up on a longer term basis, yeah, we're going to have to see some digestion of these levels at some point, folks. All right. Yeah, and unfortunately, no Mr. Teddy Kegstad today. He'll be back next week. He was attending a conference in Chicago this week, financial conference. Couldn't make it. We'll miss him as always. But he will be back next week for sure. All right, so we jump back to Fed minutes. As I mentioned, traders await the release of the minutes from the October meeting. Now, where have we gone over that period of time? So we get the Fed minutes. It's going to be interesting to see if there's any details in there in terms of that October meeting. In the committee's discussion of this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate is not a foregone conclusion. Far from it. Remember that one? Far from it. Well, the market's reacted since then. Okay. Here are the CME Fed Watch pricing of whether they're going to cut in December. We're at 50-50, folks. Technically, we're at 51.49 for a cut, but you might as well call it 50-50. Okay, December 10th is the meeting. Now, what's remarkable here is a month ago, this was a 0% chance. The only question was whether they were going to cut by 25 basis points, or there was a 6% chance they were going to cut by 50 by this meeting. And actually, the market was assigning a 0.1% chance that they were going to have to cut by 75 basis points by this meeting. And it actually didn't even assign the same chance that they would stay. And guess what? Now there's a 50% chance they're going to stay. Okay, that's the December meeting. You go out to January, there's still a 30% chance we're right where we are. Yeah, no cuts by January. That was also a 0 just a month ago. So things have moved dramatically. We get those Fed minutes today. Keep your eye out for the market on that. And yeah, you had Mr. Waller out there Monday talking about the importance of labor market conditions, supporting another rate cut in December. So he's on board for a rate cut. He's making his case. But yeah, we're at, as they say, 50-50. So the most closely watched economic data release is going to be September's non-farm payrolls, set for release by the BLS on Thursday. And we'll see what that data shows, as it's likely to be not as concise as the data usually is amid the shutdown, of course. All right, check in on Owl as they abandon their merger, and they'll allow redemptions in the next quarter. But as I mentioned, be careful of that one, man. Seems like they got some issues, and they're trying to handle it as delicately as they can. But when you're talking about mergers and then calling them off the next day, they're scrambling. Amazon remains under pressure, man. There was some real selling yesterday in Amazon. It's continuing today, even with a positive market. Amazon under pressure, and you got selling, man. I'm an Amazon bull longer term. You accelerate on some gangbuster numbers on AWS on the last quarter, and you give it all back, man. And you do it with volume the last couple days. Now, you break below October 30th, and you do it on lighter volume. Okay, but we have some selling, as in you got to pick up in selling. Right, you had all these highs with no volume, and then the selling ramps up. Longer term for Amazon shares right now. I mean, check out this one, right? You want to talk about A to B CDs all over this market? This is an A to B CDD that started 11 years ago. Talk about a pullback, man. Amazon pulls back from 189 down to $80, and then you complete that eight. Look how perfect it is. All right, can't make that up, man. You're in this longer term. You say, where am I going to potentially face some heat? You say, well, this is doing an A to B, C to D, and we just completed it, and you've ripped lower to 220 right now, but we do have some selling. On a monthly basis, strong numbers last month for Amazon. And like I mentioned, we got about 8 trading days left, but that's quite a pullback. Yesterday was something else for sure. Not something else, but you know, you traded from 235 to 222 over a period of a day on Amazon as selling came into that equity. They got a downgrade with Microsoft from one analyst. Yeah, Microsoft under pressure as well. Meta shares off by 1.2%. Geez, antitrust didn't help them. Got some volume to the upside, but the slide continues from Meta. Tesla up by 0.6% today. We check in on some of the other hot flying equities recently. Palantir flat this morning. Robinhood up by 1.8%. Coinbase down by 0.4%. Yeah, MicroStrategy down by 3.4%. And yeah, leverage in focus. Leverage. And that is one of the things that is going to be the remarkable side of crypto, folks, is it is an unregulated financial market that provides extreme leverage, right? Probably an unhealthy amount of leverage, which is only allowed in an unregulated environment. Okay? And yeah, That's how all implosions take place. You're talking about leverage. I mean, what was I talking about Sunday? I think I talked about Sunday that you're going to be able to trade stocks 24/7 with 100 times leverage in crypto over the weekends. If you can't understand the parabolic rise and fall that will occur and the exacerbated highs and lows with 100 times leverage given to anybody, then get ready for the ride. But that's what's going on in crypto. It's a big part of why especially those altcoins are struggling. We're coming back. One more segment, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets accelerating higher. NASDAQ 100, we're up by 1% right now. You jump over to NVIDIA shares, up 3%. How about that one? Ahead of their numbers after the bell. And we got a question in the Tiger's Den talking about SOX. Now, SOX, this is the iShares Semiconductor ETF. Okay. And the holdings in this equity, ETF, I should say, not equity. You're talking about, here, slide over. You're talking about Broadcom. Right? The biggest holding, actually. NVIDIA, AMD, Qualcomm, Micron, TXN, Marvel, Lam, Intel, and AMAT. That's 56.5% of the fund right there. Okay, so yeah, you're talking about semiconductors. And boy, it's been quite a run. Now, you got some selling out here from October 6th, and you have selling ramping up in the last couple of weeks. Seems like we might be heading for a test of this 250 area. That's the last time we had volume to the upside, September 8th. Duncan, Steve. You know, this run is real in AI, folks, but it's just a little bit overextended. And that might be putting it lightly, right? Might be putting it lightly. We will see. All right, what else did we just have pulled up? Oh, not that one. Yeah, NVIDIA earnings. Here we go. Microsoft, Amazon, Alphabet, and Meta taken together, 40% in NVIDIA's sales. It's a $5 trillion company, and they sell almost half their business to 4 companies. What if these companies decide they're not making as much money? Now, listen, I'm giving you outlier risks, okay? But yeah, their combined AI spend is going to go up 34% to $440 billion. So this is what's going to get talked about today. When you're talking about NVIDIA, they rang that $5 trillion bell. Yeah. And they got some revenue, man. You know, they're at some multiples, but they got some revenue. 30 times, is that a big number? Well, we're going to find out today after the bell. You got NVIDIA right now, up by 3.1%. You got buyers in that equity, man. Look at it. They're buying NVIDIA. Folks, thanks so much for kicking off your day right here with me on the Morning Market Kickoff. Stay tuned. We got our man Basil Chapman coming up next. Steve Rhodes at 11, Fast Market at 12, Larry Pesavento at 1, and I'll be back at 3 o'clock for the Tom O'Brien Show, folks. Have a great Wednesday, everybody.